next generation fund managers. Who are these next generation fund managers and what really makes them next gen? Is it their age? Whether they are millennials or they are Gen Zs or they just have fewer gray hair? Is that what makes them next gen? I actually asked Chalat, and he said, well, Deeksha, we are entering into a completely new paradigm for capital markets. And the fund managers in that new paradigm are the next-gen fund managers. That actually made me even more confused, like, new paradigm, huh? So what does a new paradigm mean? It means that the whole underlying economic factors that drive an industry are actually changing. And what kickstarts this new paradigm, right? The first thought that came to my mind actually was what Uber did with commuting, right? What Amazon did with retailing, what Airbnb has done with the hotel business. And I'm a financials analyst, so covering banks all these years, I can clearly see how virtual banking is that disruption that's happening in the banking industry, right? And that is completely changing how we look and do banking. So what is the new paradigm for capital markets, for investing? What has really changed? Like, are we going to completely change the way we invest? Are we going to completely change the way companies raise money? Are we going to change the way we analyze, value, assess companies and investments? So actually, I don't have the answers, honestly, and I'm still researching, and which is why I thought this is a perfect time to actually have the experts from within your community, from within our community, to have that conversation. A very good afternoon, ladies and gentlemen. My name is Deeksha, and I am a financials analyst with Bloomberg Intelligence. We are an in-house independent research team within Bloomberg. Please join me to welcome Khun Win. He's the CIO of Principal Asset Management, and a lot of you would know him for his 17 years over experience in the industry. But what a lot of you would not know is that he teaches financials courses over the weekends. Please also welcome Khun Nataria, Senior Investment Manager at Beacon Venture Capital. We'll be drawing on her experience on fintech and blockchain investments today. And also good to know that she, in fact, advises startups outside of her work. Very pleased to have Khun Jesida as well, CEO and co-founder of Phenomena. He's leading the charge on wealth tech in Thailand, and he's also served as the president of the Thai FinTech Association. Really, really glad and pleased to have you on board. Let's quickly start without much ado. May I start with you, Khun Win? How are investor demands changing, and how are expectations changing in this new paradigm, so to say?
Yeah, I suspect that I might be in the wrong panel because I'm an old gen, not the new gen fund manager. I see three things coming up at the moment. Number one is that, in my investment world, we see a lot of clients looking for using quant, AI, machine learning into fund management. So the biggest question out there is, will an old school fund manager like me lose a job one day? So I keep praying that it will happen after my retirement, not yet. Second one is on the distribution side. My clients, they demand more of the online platform to buy and sell funds. Not just buy and sell, they want the demand for advice online, the demand for customized portfolio online. So that's keeping more and more. The third one is that Thai investors, they demand more variety of product. If you ask me 17 years ago when I started my job, Thai people only invest in Thai bonds and equities. Today you can have everything. China equity, Vietnam equity, hedge funds, private equity, ESG products. And at the same time, you can buy cannabis ETF from a local brokers. So it's a wide variety that they're looking for. And so those are the three trends that I'm seeing today.
That's perfect. So that actually sets the stage for what we're going to discuss on the panel anyways. Can I actually pull in the first poll question? So we could not have all of you on stage, so we decided that this is how we are going to loop all of you and tap on your wisdom and your experiences during this panel as well. The first question, are your clients engaging with you only or mostly via digital channels? You have to vote yes or no. time to bring out the phones. It's a tech panel, guys.
Can I cast my vote too?
Absolutely. That is a very interesting result. Wonderful. So, not yet. Not all are digital yet. Can I bring the second question as well while everyone is on their phone? So from some of the other markets that I've been looking at, this is an increasing trend, right? Clients just want to connect digitally. They don't want to fill forms. They don't want to come to offices. It's just very easy to pick up the mobile and do financial services activities. So second question, have you heard engagement from clients go up since they switched to mobile platforms? For those of you who have seen more clients, this will be a little bit more relevant as well. So the answer is a very, very strong and clear yes, right? So to that point, actually, DBS was the first Asian bank to actually quantify and measure the value of digital value creation, right? So it defines digital clients as people who have bought the product with you, one product with you at least digitally over the year, or who have done more than half of their transactions with you via online channels. And the results that they have shared are really staggering. Retail clients who are more digital, they have twice as much more income generation for the bank. Their cost-to-income ratio is 20 percentage points lower, and their ROE is 9% higher than the non-digital customers. So it's a very clear that there is value in that, Nat, but is that what you're also seeing from a demand side perspective?
Yeah, so being a millennial myself, I guess, I think millennials are it's a very hard generation to serve, right? Because they are born technology native, they have very low tolerance to, a bureaucracy and slow, has very little patience, and they want things to be quick and work 24/7. So I think new types of assets that millennials are looking towards to buy is different from the past, and we're more prone to buying assets that are more technology native, for example, cryptocurrency. I've done some market research asking Thai people who are investing in cryptocurrency today, and I found that a majority of them are less than 35 years old. So these are the type of assets that millennials are looking to buy. And believe it or not, even though you don't believe in this type of assets, but the market cap of cryptocurrency is now half of the stock exchange of Thailand. And it took it only 10 years to get here, where Thai stock exchange has been around for 40 years already. So this asset class is actually growing, and it's growing because millennials one asset like this. You can open an account instantly, you can trade it and settlement with near instant. You don't have to wait T+2 days anymore. And it generates you very high return. So all of these characteristics really resonate with millennials.
Yeah. So I think the millennials verdict is out. So Jet, we also had this conversation, right? You told me that millennials are more prone to going for crypto. Can you tell me why?
Actually, I need to declare that I'm also a millennial. Because by definition, millennial is who born from 1981. So I'm the first generation.
A gap here.
So you are not millennials, Kun Min. But we are millennials, right?
Yeah,
okay,
yes.
right. Okay. So I'm the eldest millennial on earth. So from what we see is a similar trend that you just mentioned, that we see more and more adaptation rates of the millennial generations, which tend to be like a majority of the investor in the next 10 to 20 years, that adapting to the digital in order to, from open the account, having the advisory service digitally based. I see the trend is increasing faster and faster. And also I start to see the kind of adaptation rate happen in for Thai investor also. Similar to cryptocurrencies, right now I think we have around 100,000 of traders in cryptocurrencies. From what I run my business as a fintech startups, I saw a lot of demand for the digital-based wealth advisory service from opening the account. Right now, it's like more than 80% of the millennials choose to having account open digitally by paperless eKYC based.
Okay.
And at the same time, I also see the same trend happen to the elder people also that age around 40 to 50 years old have more and more adaptation rate to this type of service.
So why do you think they like robo-advisory more? Why are they adapting more to it?
Actually, I think it's about the time sharing from my personal perspective, especially Thailand. Thai people is really internet addicted. I think top of the world, how it's very stunning number. It's like 8 to 9 hours a day on average on internet. It's very crazy, Thai people. And the Thai people spend on average 1 hour for the whole population on messaging apps like Line, and another more than 1 hour on Facebook and YouTube. So right now, time sharing wise, it's Thai people spend lots of time of their free time in the internet, in the virtual world. So that's igniting the conversion of the investor to use the service digitally.
Actually, that's a very interesting point. So it's not just you going and using social media, it's also the level of comfort that you develop with technology that changes behavior. And not a lot of us give that much thought to it, right? I mean, in a couple of other panels, when we asked this question, how comfortable are you trusting your money with technology? People who don't use the technology as much are more likely to be averse as compared to those who use more. So what I also gather from that conversation is that the game is actually changing then. So if everyone is, the generation's moving more towards the robo-advisory model, then essentially the competition is no longer on financial product offering, right? It's becoming more and more competition on the quality of technology or what technology you have. And I want to use that to bring us to the next section of what I wanted to discuss. How do you think technology is changing the way markets are behaving? Kunwin, can I tap you on that question? So how do you think markets are changing?
On my side, I think the most disrupting thing happening is the growth of ETF, passive funds. Because we are, I say again, we are old school active managers. So when you have ETF coming along and they're growing very fast, they disrupt our work. You go back to June and July, we have a lot of inflow from foreigners buying Thai stocks, and they mostly ETF. And simply because MSCI increased the weight of Thailand. And then in August, things reverse. The money flow off because again, MSCI increased the weight of A shares, China's A shares, and reduced the weight of Thailand. When ETF money come in, they just buy any price as long as the stocks are in the index, right? So you are having a market where it's driven not by fundamentals, but by flows. At Principal, we have this simple comparison of valuation. Can you believe me that today, the two most expensive markets in the world are USA and Thailand, right? Thai large cap stocks are at their most expensive level. We studied that back into about 15, 16 years history, there are about 93% chance of Thai stock to go below today's level, which means that they are very expensive. And that's driven by ETF. So my job, normally we want to find a good stock at a good price, and then we wait for someone to discover the stock. When ETF come in, it can't be discovered because they just buy stocks in the index. So the stock that I like might be overlooked by ETF flow or whatsoever. It doesn't, it's not going to be there.
I mean, this point could not have been more timely. If you guys have been following Bloomberg News, this is a very phenomenal month. We just figured that for the first time in history, passive flows, assets under passive flows have actually exceeded those under active flows. And millennial or no millennial or Gen X or Gen Y or Gen A whatsoever, these are the realities every fund manager is facing right now, right? And what does that mean? That passive funds are actually going to determine which way the markets sway, as what you just pointed out. Can I actually request you to bring out your phones again? I want to hear from the audience on this topic itself, which is about the biggest threat that you guys perceive in your current roles right now. The next question. So what is the biggest threat to the fund management industry in Thailand? You can choose more than one: passive investing, robo-advisory, or regulations. You've managed to scare the audience fairly enough.
I did a good job on that one, I think.
Passive investing is really coming out to be the bigger threat right now. And robo-advisory among the lowest. So, well, regulations need some attention too, it seems. Can I actually bring the next question as well? And while I do that, I want to ask this question to you again, Kunwin. Are public equities under threat? From companies' perspectives, it's obviously that, like with the new economy firms, there is a lot more option to raise money. Private equity, venture capital, and founders are actually really worried about going public too soon because they lose control. So are public equities under threat?
You know, I'm optimistic on that one because I believe that a healthy private market will lead to a healthy public market. Because, you know, from a startup all the way to public company is a long shot, right? If you can have a healthy private market, venture capital, etc., then you groom the startups to grow. And the startup can wait a bit longer, you know, until they are ready to be listed, right? In the old days, you find it tough to grow fast enough and be listed, right? So today, you can take a bit longer time, be groomed. So I argue that a healthy private market is good for public market.
But from an investor's perspective, do you think that gives you avenue for more investment, like more points in the company's journey?
Because investors demand something different also. So I see demand from Thai investors, not just public equity. So we are now allowed to do private equity funds, for example. So and investors have demand for that. They can take the risk. They can do a longer term investment on private equity side. So I think that's a good and healthy trend going on.
Nat, you work a lot with startups closely, and of course, we're talking about venture capital. So what are your thoughts on this?
Yeah, so I think now public market will have a harder time finding value from high growth technology companies, actually. And this is because the trend that we've been seeing is technology companies take a longer time to do their IPO. So before, in 1999, it took only 4 years for a company from the startup stage to IPO. But today, it takes around 13 years. So time has grown a lot, and that is because I think it's a few reasons. The first thing is that the number of IPO shares in the US has actually declined over the years by half from 1999 to today. So now you don't have that active stock market to facilitate and support these technology companies listing anymore. And second thing is that there's more regulatory disclosure requirements for companies. And at the same time, in the US, they have rolled out this act called the Jobs Act, where it allows small companies to increase the number of shareholders in their company from 500 people to now 2,000 people. So it makes it easier for small companies or startups to raise funds privately. So you get these two things together, very not so active public market, more disclosure requirements for a company that want to do IPO, and also easier access to capital for small companies. So you can see that the value that's being captured has moved from public market to private market. And you see that if you look at back in 1999, where it was during Apple, Microsoft, Cisco, and Oracle when they were raising funds, these companies, when they did their IPO, they was worth less than $1 billion market cap each. But now, today, they're worth $2 trillion. That's 4 times Thailand's GDP. So you see that a lot of value was created after they listed, so in the public market.
Yes.
But today, a bunch of companies, all of these unicorns, unicorns meaning companies that value more than $1 billion, they are more likely to be private company.
Yes.
And that makes investors, traditional funds like PE funds, mutual funds, are more inclined to invest in private market as well. So this is the trend that I'm seeing, and I think it's important for fund managers who pursue active management strategy to start looking at pre-IPO stocks or pre-IPO companies.
So that's exactly the point that I also was always wondering. I would add, though, that the number of startups has also proliferated across the globe, right? So that also makes a difference. But definitely, the value chain has kind of shifted, and pre-IPO, there's a lot more value that you can capture here on as well. So again, coming to you, Khun Jasida, AI-based investing and robo-advisory. What I want to hear from you is this still within the helms of the quants, or do you think this has gone mainstream? Like every fund manager should be using AI and machine learning in their workflow. And at the same time, I would like to poll the audience as well. Question number 5, please. So are you using AI and machine learning in your daily workflows in investing? Please bring out your phones and vote. You can have your own view. It's fine. I know the audience is...
Interesting.
We will not dim your spirits.
So should I answer
Yes,
now? Or
absolutely. Please go ahead.
So now it's not about robo-advisory, but it's about having AI or machine learning in order to make investment decisions.
Yes.
So it's the competitions between humans and machines, between data scientists and fund managers. So at the moment, the recent development I saw, for example, in Thailand, we are having some asset management companies setting up the ML desk already. I heard from my friend that one of the large asset management company have team of around 10 data scientists and start launching ML-based funds. That means we have machine learning guy and launching the mutual funds without traditional fund managers.
Can you also share some examples on how people can use AI and machine learning within the process?
Actually, the capability of AI, or normally it's a machine learning, not AI yet. There are 3 layers: machine learning and deep learning, like a neural network model, and AI. Mainly for investment decision is still only machine learning and deep learning, mostly. Actually, it's similar for me. It's similar to regressions. I study economics, and the long times before, economics models, mainly econometrics, regressions, is a key tool for forecasting everything from economic data, market information, and turn out to be the prediction of the securities price. The ML, how it works, it's similar, but what ML can capture is the non-linear relationships. It will be like X factors, like numbers of economics and market information as an X factor from X1 to X100, similar to regressions. And we got ML model, like recurrent neural networking or binomial tree model as a model similar to regression model. And Then we need infrastructure, a server, mainly big three, Google Cloud, Microsoft Azure, or AWS from Amazon to run the model. It's very expensive, actually. That's why these three companies are very huge, got very huge market caps. So, and it will turn out to be the decisions of the ML.
Okay.
Anyway, what happened right now, I saw in global space, like Goldman or BlackRock, they're hiring hundreds of data scientists into the team. But the result is only 30 to 40 basis point alpha. That's what they got right now. That means today, the result is ML still cannot beat traditional fund managers. And it's still unproven. But ML already proved that they can play chess better than human and can play ROV, the e-sport better than human.
Yes.
But on fund manager space, still unbeaten yet.
Okay.
So there might be
I can still
competition
keep my job. Okay.
soon next year that could win and machine manage fund against each other.
No.
I can
Right.
sense the tension between tech and
Right.
fund managers already. The heat is turning on. So very interesting points. I mean, I'm not sure actually, do we provide services around ML-based investing? I think Bloomberg does something around that as well. We should,
Bloomberg can conduct like
Yes.
competitions. It will be very.
I think we should contact the sales folks for that. But what I really find very interesting from this is that it is basically the processing power for machines to be able to generate alpha, so to say. It's at a certain level yet, and as you pointed out, from machine learning to deep learning,
Right.
that processing power is very crucial, and that is growing at a faster pace.
Right.
Whereas for the human brain, we are at a certain level. There is a kind of a cap to how fast we can process information. So that's where the edge of the machines come from.
Right.
And I mean, that also kind of brings me to my next topic, basically. This whole tech proliferation is also creating new asset classes. And I think Thailand is the perfect platform to have that conversation, because when I did the panel at SET event last month, there was a conversation around digital assets and tokenization. So, Kunjasada, how about new asset classes being created?
Right. So I would mention two things. The first one is what I recently have an experiment. It's called crowdsourcing-based investor decisions on the advisory space. So before this, 20 years ago, normally investors, they will make decisions based on research.
Yes.
When they go to physical financial institutions, brokers, become clients and read the research, find the RM and make decisions, right? But today, it changed. Since the time sharing changed, Thai people spend like hours on internet. So in the internet, it's like the virtual world of the what so-called lead opinion.
Wow.
In physical world, lead opinion is set of people. But in virtual world, there are totally different lead of opinion world.
Okay.
For example, even in Thailand, there are one lead opinion in Thailand called Long Thun Man. I know him personally, but he's not. No one in the mass public know who he is, but he's a very popular lead opinion. So crowdsourcing means on the advisory space, they start having this online lead opinion, constructing portfolio recommendation to clients, and it's attract a lot of investors.
Wow. So something like social
right.
influencers.
For my company, we just launched a robo-advisory model from the lead opinion in Thailand, work
Wow.
together with the companies and invest in Kunwin mutual funds. And it's turned out very well. Thousands of investors want to buy these crowdsourcing advisories.
If you guys pay a little bit more
Right.
attention, so machines have higher processing power, but we are trying to use everyone's intelligence and knowledge and processing power via the social media platform here in case of investing.
Right.
That is, I mean, that's really cool actually.
Yes, and actually it's also happened on the States or European side in different ways also. So I think the even AI is rising, but like Jack Ma said, what we have is hard. Humans have heart and have like kind of qualitative value. That's why these lead opinions by human still very valuable.
It's very interesting to see the millennial talk the other language. That's great. I think how about the tokenization discussion?
Right. And another thing that's coming soon and maybe faster than everyone thinking about is STO. Securities token offerings. Since I work with SEC as a working group committees with SEC on the digital sides, there from time to time they have a lot of demands of tokenizing. The STO concept is mean every asset, whether it's financial assets, capital market assets, stock funds, bond debentures, properties, condo. This place can tokenizing and sales through blockchain. So more and more of this trend is happening around. So I think, for example, in some country, they start having stocks to trade on the blockchain base without the intermediaries. So I think this trend might happen one day also.
Yeah, millennial is back on the
That's
agenda.
right. That's right.
Can I jump in?
Yeah, sure.
You know, we talk about the modernization, the tokenization, right? But as modern as Bitcoin, cryptocurrency, when you look back at the graph of Bitcoin price 2 years ago, when there was a bubble, you'll be surprised to know that it's actually pure human psychology. There's nothing about technology in there. It's pure human psychology. When someone put Bitcoin graph with the tulip mania graph, same thing. So, 400 years passed, we still have the same problem with high psychology that people just speculate on something, without fundamental value.
I'm with you, and let's discuss that again. But Nat, on the tokenization topic, what are the benefits? Why do you need stocks are tokens already, right? Why do you need tokenization?
I think, when you look at stock, it's still very hard for you to open an account to trade. It takes several days to do settlement, and there's a lot of regulatory requirements for you to trade traditional assets like stocks. And millennials, sometimes they don't want to go through all these hoops. They want everything to be 100% digital. So you can trade security tokens by just using your digital wallet, right, to get access to these tokens. And I think it's not just the ease of access part, but also the fact that now when you tokenize real estate or collectibles or arts, you essentially can break it down to very small fractions. So that allows millennials with not much wealth to practically have an alternative assets to invest in. And not just that, but they can also sell these tokens to other people easily as well. So the notion of being able to access it easily through 100% digital channel through your phones and cryptocurrency wallet, and the ease of the ability to buy in fractional shares and the ability to sell it to other people easily, these things makes it very attractive.
That is a very strong millennial attack, by the way. And the reason I say that is bulk of the argument that I hear from all the banks that I cover on why they're not going full tech and why robo-advisory won't pick it up is because actually millennials are all talk, but they don't really have all that much money. And now what we are doing is, because they don't have much money, we are actually designing asset classes which help them break down the existing assets into more liquid forms and then let them invest. Now, hold on. It is very worrying for me. And I'm sure Khun Vin will understand why it is worrying for me. You have a very illiquid asset, and you are generating securities. I'm from the Lehman era, guys, and I hear securitization, and it gives me a little bit of a shiver. Kunbin, and we heard from Kunparli as well, right? Like it's important to balance the risks, and we are going fast, but I want to hear your thoughts on that.
Yeah, like I said, being old school fund managers, we cannot do valuation of Bitcoin. Period. There's no way we can value it. So the price of Bitcoin is based on purely speculation, and that's why I said that although it's very modern, kind of currency, but when people trade on it, it's not investment, it's pure trading, it's pure speculation. So we have to be careful on that. I always advise people that you cannot really do pure fundamental valuation of Bitcoin. You have to be careful on trading those and make sure that you don't put too much money on that. It might be part of your investment, but not the whole thing.
So, that's exactly the advice that we've seen through cycles, right? If anything that you really don't understand the fundamentals of, it is not very easy to, and from a regulator's lens as well, you don't want to have your household savings into something that you can't really value. But even before we get there, I think what I want to hear from you, Nat, is what are the challenges? Are we really there from a technology basis? Are we ready for tokenization?
I think not yet. There are a few hurdles that security tokens need to go through. And the first thing is the regulatory part, because securities law is different from jurisdiction to jurisdiction, right? So this regulation prohibits the ability for investors to freely trade the tokens. So the attractiveness of token declines a lot because of that. So we kind of need regulators to come together and think about the standardized way to regulate security tokens so that we can trade these tokens freely, both domestically and also internationally. Okay. And the second point is also the technology part. Even though cryptocurrency has been around for 10 years, security token is still very new. So we are creating a trading system from scratch, whether it is broker-dealer system, custodian, the exchange platform. So all of this is still in development and it's not ready yet. But what's interesting about cryptocurrency space is that you get a top cream of the engineers of the world and the data scientists of the world working in this space. So when you have really smart people come together to do something in crypto, I think the pace of development will be really, really fast.
That's very interesting. Since we're discussing different investment ideas, and we have Kunwin on the panel, can you please share, is there any other way to play these themes or, the whole advancement in technology, or what investments are you looking at now?
At Principal, we have a couple of subsidiaries that they did try using machine to select stocks. One of that is Origin, which is under Principal Group. They do global small cap stock, and they only use 4 people. So how can they cover 6,000 stocks in the universe with 4 people? Basically, just use machine. So they use machine to screen all those 6,000 out down to maybe 200 stocks, and then they work from there. Another subsidiary is our joint venture between Principal and China Construction Bank in Beijing. Again, they are data scientists. They are actually rocket science for me. So they use machine to screen A-share stocks based on factors. So they try this and that factor, which one worked, and it seems to be working. So the two, at least 2 teams in my group, they did try. Seems to be working quite well. They cannot beat the index every year, but they beat the index in the longer run. We did try take that to Thai stocks. We found that it doesn't work yet. The reason is because we tend to work on the large cap universe, which is about 100 stocks. And then the machine needs a bigger size, big sample size to pick the stocks. Like you want to pick the best stock in this sector, but we only have one stock in some sector, like AOT as an airport. So when you have a small sample size, it doesn't work, right? So we did try that, not working for Thailand yet.
But what has been your best investment this year then? What's running the most?
What's running?
Yeah, what is your...
Oh, it turned out to be REITs. And okay, just to connect my old world of real estate to the new world of data, you will be surprised to know that our top pick in real estate is actually data centers. because the growth of data demand more data centers. And why don't we invest in that? We get like 6% yield from data center in Singapore, in Australia, in Europe. My second topic is logistics. Again, it grows from e-commerce. The more you buy things online, the more you need logistics centers there. The third sector is indirectly related, which is office. Again, office seems to be boring segment in real estate, but we saw more demand from technology companies and co-working space from startups. They rent office more. So office is doing well in Bangkok, in Singapore, in other parts of the world. So yeah, I still benefit from the tech development
So this
from
is
real
the
estate.
one-up. This is the one-up of the traditionals over the millennials. You create new asset classes, you do crypto, you do fancy. He will find a way to make money out of that too without doing crypto.
So the more you use blockchain, the more I use
The more you...
data center.
centers.
Yes.
That's really interesting.
And
Okay.
we work IPO also. Very interesting.
Not recommended.
Yeah. Okay, so the other interesting ideas that we have found out in our research is the new investment areas that people are looking at. People are actually trading comic books. They are investing in wine. They're investing in green tea. And this is not like green tea futures. This is like rare green tea. So it's really interesting like how things are. I think there is a point when we'll start trading on people, like Maggie will become a stock. So as we move on, I think it's time to address the elephant in the room, which is, do you think tech will replace, or robos will replace fund managers? It is a serious topic, and I'm sure there'll be a lot of heat on that. Can I just poll the audience? Everyone's career is at stake, guys, so time to bring out the phones and exercise your votes. Do you think robo-advisory will increase adoption within your clients right now? Can you please bring up the poll? Thanks. So, there is little doubt that technical analysis is becoming really important, but oh wow. Robo-advisory will find higher adoption with clients in the next 5 to 10 years. Let's bring out the next question as well. I think the response is pretty clear on this one. Do you think AI will provide competitive advantage? The next question. Do you think AI will be a key competitive advantage or threat for your career in the fund management industry? Kunjet, time to be put on the spot now.
All right.
You are the biggest supporter of robo-advisory that I have
Right.
on my panel. Do you think
I
robos...
quit fund manager jobs to run robo-advisory.
Yes, so
Right.
do you think robo-advisory will replace human beings?
Answer to your questions, my personal view on this is similar to when Jack Ma debated with Elon Musk last week. So when I was fund manager, I'm a bottom-up fund manager, which I value on qualitative data more than quantitative, like the informations get from the company visits with the major shareholders or suppliers. So on my personal investment right now, I eligible to invest in stock since I'm not fund manager anymore. I still not using AI at all. And I still use my, what I believe is a bottom-up deep dive style. So I believe that for the stock picking in the long term, whether Google can beat Korean guy on Go Chase, but in the fund manager world, human will beat AI.
Oh my God, we
That-
have
that's my
converted the
personal view.
millennial. We have converted,
But
so...
the people, fund manager in the next era with capability of fine-tuning machine learning, as Kun Win say, will have a big edge. Some of my ex-colleagues start learning Python. You can use Bloomberg new functions, Python and Jupyter. So
Yes.
I'm doing my work right. Okay, Python and Jupyter, do it, and it will create an edge
Okay.
for using this AI machine learning as part of investment decisions.
So what I'm getting is we are more in the hybrid zone where, fund managers will use robo-advisors to come up with, like, it'll be basically a complementing.
Anyway, sorry, very short here. That's my answer about fund managers. Another answer is about the retail investors. I believe that robo-advisory will dominate the market, but from what I run the companies with around 10,000 clients, the hybrid model will be the end game of this, where the low ticket size is comfortable to do pure robo-advisor. That means advisoring without human at all from end to end. But for the high ticket money, for example, 30,000 US dollar and above, let's say, still need human touch as part of the journey.
Did you guys talk before you came here? Because
No,
we had
not
the
actually.
exact same conversation. So Kunwin, like in this setup, like what do you think are the skills that fund managers need now?
On the surface, you might think there are two camps, right? Fundamentalists and quant guys. But I would say that going forward is more the middle ground. People like me, we have to know how to use machine, how to use automation to help us pick stocks, because we want to do things faster and more efficient. So what I could just say that you might need to learn some skills to help you doing that. And I think the most difficult question for machine to beat human is the psychology, as I said. How could a machine drive up the price of Bitcoin? That's human. How could you have 1/3 of the bonds in the world to be negative yield? That's human, it's not machine. So you still need human to do some of this very deep thinking. Machines will help you do something faster, but may not replace everything.
And what other skills that you would recommend that,
Use Bloomberg.
Please note, guys, use Bloomberg. Thank you for the support. But, in terms of, do you think it should be more quant skills? Do you think they need, more presentation skills, soft skills? What is the element that will be most handy? Because if the processing is going to the machines,
When I say use Bloomberg, I mean that the next gen managers, you need to know how to use IT or automation to help you do the work. You need to be the one who code, the software, the program. You just need to know how to use it, right? So I think that's a key thing that you need to develop skills on. Of course, the soft skills that we still need is still there. I still have to meet my clients. I still need to present to my clients. I still need to have a good human touch, a good way to talk to my clients. So my advice to the young generation is that you can't be a pure computer geek without being a good people person. Yeah.
So be people, don't be machines. Be people is the message, right? Nat.
Yeah, I have one quick point on that. When you said that the market is still driven by psychology, I think there's a role for technology to play on that part, especially you can use machine learning or deep learning to kind of do sentiment analysis and make trades based on that. So there's a lot of value that can be captured by
I
using
have to
technology.
agree with that. So there are surveys that tell you that machines can actually predict your behavior better than you know yourself. So psychology, well, we are not so sure. But purely in terms of robos replacing, or what are the new skill sets that are required to adapt in this environment, what do you think?
I do think that from what I've observed over my portfolio companies or over the VC space, a lot of people that these companies are hiring have to be multidisciplinary, meaning that they can no longer just have finance degree or economics degree, but a lot of times these companies are looking for people who both have computer science degree and also business degree as well. So we're seeing universities in the US producing graduates who have double degrees in computer science plus something else, because you can no longer predict, like do well in fund managing space with just one disciplinary.
Thank you for saying that. I did my engineering and then I did my MBA, and I got beaten down right, left, and center for not respecting my engineering degree. So we need both. Please, guys, take note. I think that is a very interesting panel. Thank you so much. We've actually run out of time. Can we just do one last poll quickly? I want to know from the audience, do you think you are ready or being prepared enough for this new paradigm of investing? How comfortable do you feel? And have these guys scared you enough? Or I want to see how the result turns out. Well, you did a good job.
I'm not ready as well.
I think just acknowledging that you're not ready and working towards it is half the problem solved already, right? And I mean, just to summarize, one of the key messages that I took away from the panel today is that maybe robots will replace humans, maybe they won't. But the one thing that I get for certain is that humans who are fund managers, who are not using machines, will definitely get replaced by those who are. Thank you for joining us today, ladies and gentlemen, and thanks for spending your time with us today.